I did not make my fortune, by and large, on the cutting edge of technology. My first investment with my pitiful savings of a venturesome sort, I invested in a company right in Pasadena, and it was called William Miller Instruments. And I damn near lost all my money. It was hell on earth. We just barely squeaked out with a substantial outcome. And what did us in is that the oscillograph that we'd invented and we were so proud of, and we thought it was going to knock the world flat, somebody invented magnetic tape without telling me. And by the time we got that oscillograph ready to go to market, we sold three total in the whole world, whole country. So this technology is a killer as well as an opportunity. And my first experience, it damn near killed me.
And so, but that's sort of the other part, right? Over the 75 years that you've been involved in investing.
What that did for a long time was keep me out of venture capital on the edge of technology.
But even
I tried to avoid it.
But even
the companies of America behave more like biology than they do anything else. In biology, all the individuals die, and so do all the species. It's just a question of time. And that's pretty well what happens in the economy too. All the things that were really great when I were young have receded enormously, and new things have come up, and some of them started to die. And that is what the long-term investment climate is. And it does make it very interesting. Look at what's died. All the department stores, all the newspapers, U.S. Steel, John D. Rockefeller's Standard Oil, the pale shadow of his former self. You know, it's just like biology.
So
they have their little hour, they have their little time, and then they get clobbered.
That matter?
Well, some people try to get on the cutting edge of change, so they're destroying other people instead of being destroyed themselves. And those are the Googles and the Apples and so forth. Other people like me do some of that, joining things like Apple, and in some ways we just try and avoid big change that we think is likely to hurt us. And so Berkshire, for instance, owns the Burlington Northern Railroad. You can hardly think of a more old-fashioned business than a railroad business. But who in hell's ever going to create another trunk railroad? So it's a very good asset for us. And we made that success not by conquering change, but by avoiding it. Now, Burlington Northern itself has been quite clever at adapting technology to their railroad. Imagine the good luck of being able to take an existing railroad and double deck all the trains and raise the heights of the tunnels a little and so forth. And all of a sudden you got twice the capacity at very little incremental cost, which is what that railroad has done.
So that is a
everybody uses new technology, but it really helps to have a position that almost can't be taken away by technology. How else are you going to carry goods from the port of Los Angeles to Chicago, except on our railroad?
How has technology affected the inflation rate, the advances in technology? I've heard Alan Greenspan make a lot of interesting comments on that. I think it baffles him to some extent, but he also recognizes that there's some important, very hard to measure factor that has caused inflation not to behave in the way that most people expected, with this drop of employment, general prosperity, etc. And I think he attributes it in some part, but again immeasurable, to what has been happening in the information technology world. Obviously, low inflation is good for fixed income investments, but that's been reflected to a significant degree in a long-term rate that's at about 5.5% now. You know, it does look at the moment like an almost perfect world in terms of the macroeconomic factors, and That probably is a reason why people are enthused about stocks, and it's a reason, and it's a good reason in terms of price inflation. It's a good reason why bonds have behaved well over the last, really, since 1982. I don't know the answers to what it means for the future. I have to believe that it's very good for this country to have the lead in information technology that it does on the rest of the world. I mean, it seems to me as a non-expert that we are so far ahead of the rest of the world in terms of having the leading companies and the money flowing into it, the brain power flowing into it, that it's hard to think of who's in second place. And I think that's helped this country in some very significant way, but I don't know how to measure it. Charlie?
Well, I would say that Berkshire's businesses, on average, are less likely to be obsoleted by new technology than businesses generally. No steel-toed work shoes. I do not anticipate a significant change in the technology. And I think we have more of the stuff that's sort of basic and hard to obsolete than many other corporations do.
Yeah, as we mentioned in the report, we think all of that activity is very beneficial from a societal standpoint. Our own emphasis is on trying to find businesses that are predictable in a general way as to where they'll be in 10 or 15 or 20 years. And that means we're looking for businesses that, in general, are not going to be susceptible to very much change. We view change as more of a threat into the investment process than an opportunity. That's quite contrary to the way most people are looking at equities now. But we do not get enthused about, with a few exceptions, we do not get enthused about change as a way to make a lot of money. We try to we're looking for the absence of change to protect ways that are already making a lot of money and allow them to make even more in the future. So we look at change as a threat. And whenever we look at a business and we see lots of change coming, 9 times out of 10, we're going to pass on that. And when we see something we think is very likely to look the same 10 years from now, we feel much more confident about predicting it.
Yeah, peanut brittle has very little technological change, too.
Yeah. They better not change it. We like it just the way it is.